So in this video, you will learn everything you need to know about Forex trading, from the very basics, like what is Forex trading in the first place, to a step-by-step Forex trading strategy, trading the Euro US dollar on the 15-minute time frame. Well, let's begin here by answering the very important question, what is Forex trading? And first of all, Forex stands for foreign exchange. So Forex trading simply means exchanging one currency for another currency. And if you think about it in trading terms, you basically simultaneously buying one currency and selling another currency. And the goal here is to make money. And that happens if your currency increases in value relative to the currency you sold. So for example, if you are, buying US dollar and selling euro, what you want is, of course, that the value of the US dollar is increasing relative to euro. At least if you are going long. You can actually go both long and short, and we will talk about that more soon. But now, guys, and this is very important, let's take a look at some key facts about the Forex market. And here, the first fact is something that I don't think many people know about, but this is actually the largest financial market. We have around 7 trillion worth of currencies that are traded every single day. And that is far more than the stock market. Another important thing here is that the Forex market is a 24/5 market, meaning that it's open on from Monday to Friday, but closed on weekends. So one thing that is very nice about the Forex market is that it's almost open 24/7, while, for example, stock markets have their certain open times. Another thing about the Forex market is that in some sense it's actually decentralized. Unlike, for example, stock exchanges, Forex has no sort of real central location, and trading happens electronically everywhere. And here, and this is very important, the Forex market, especially the large pairs, and if you don't know what a pair is, don't worry, we will talk about that very soon, but they tend to have massive trading volume. This follows from that the Forex market is so large. And high liquidity actually have multiple benefits. And if you want to learn more about liquidity, I actually have a video about liquidity. I will make sure to link it somewhere up in the corner. And I highly recommend you guys to check that video out after this one. And here is actually a very interesting fact to consider. And that is that, most people are actually already Forex traders. And what do I mean by this? Well, even if you have traveled abroad and, sometimes exchanged money in another country, you have actually already participated in the Forex market. But if you are watching this video, you are probably here, not for traveling, but to actually make money. But alright, so now let's take a look at something that every Forex trader needs to understand, and that is currency pairs. And first of all, currencies are always quoted in pairs. For example, Euro US dollar is equal to 1.25. The first currency here is called the base currency. So in this case, Euro is the base currency, and the second currency is called the quote currency. So we have base and quote currency. And the easiest way to think about this, at least in my opinion, is that you should think about, for example, Euro US dollar as Euro measured in US dollar. So how much is 1 euro worth measured in US dollar? And if it's 1.25, it means that 1 euro is equal to 1.25 US dollar. But if we, for example, have euro as the base, and let's say we have Japanese yen, which is JPY, this means euro measured in Japanese yen. So always have this thinking pattern in mind. At least this is how I think about it, and I think that's an easy way to think about it. And here, we usually divide the currency pairs into different categories. First of all, we have the major pairs, and this is the larger pairs, such as what we talked about, euro, US dollar, but also US dollar, Japanese yen, and the pound measured in US dollar. Next, we also have something called exotic pairs, and this is basically major currencies paired with currencies from emerging markets. Emerging markets are basically markets that are, growing, and they are pretty big, but they are not really at the same level as the US dollar. So here are some examples: USD TRY and Euro THB. What is important is that these exotic pairs tend to have a little bit higher cost, and they also have more volatility. And volatility is a concept you really need to dive deeper into. And fortunately, I do have a video about volatility, and I will make sure to link that video up in the video card and the description. We also have minor pairs here. And these are basically major currencies that are excluding the US dollar. So for example, euro, pound, and pound Japanese yen. Another thing you might have heard about, and that you will definitely hear about if you want to trade Forex, is something called a pip. What is a pip? And this is a concept that I don't really like, actually, because a pip can be hard to or it can take a while to understand what a pip is. And that is because a pip is, for most pairs, it simply means 0.0001. So for example, a move from 1.1050 to 1.1051, that is 1 pip. But the measurement actually differs a bit depending on what pair you are trading. For example, for the Japanese yen here, a pip is slightly different. So I actually usually prefer to think in percentages rather than pips, but I still think that pip is something that you should learn and should understand. But right, so now then, how does Forex trading work? Well, the first use case here is speculation, or in other words, trading, right? This is what we are doing. We are basically betting on the direction of exchange rate. So for example, we might trade euro US dollar, as we talked about earlier, and we might bet that the value of the euro will go up relative to the value of the US dollar. And here you can actually bet that something will either go up or go down. Going long simply means that if we take the euro US dollar example, if you think the euro will rise against the USD, we buy euro USD. So if it, for example, rises from 1.10 to 1.12, you profit from this 200 pip move, right? Remember, 1 pip is equal to 0.0001. And the opposite is going short. So for example, if we think the pound will fall against the Japanese yen, we can sell the pound / Japanese yen. And if it falls from 160 to 155, you profit from the 500 pip move. And here you can see how the pips actually differ a bit in measurement. But guys, knowing about going long and going short is such an important part of trading. So I highly recommend to watch this video right here. I have a short video explaining what going long and going short means more in detail. So I highly recommend checking that one out. What you also need to understand is something called leverage. And leverage allows you to control a larger amount of money. So for example, 100 to 1 or 100x leverage means that you can control 100 times more than what you have. So for example, you can control $100,000 with just $1,000, but this amplifies both your profits and your losses. But luckily, guys, I do have a video about leverage trading. Also highly recommend to check that one out after this video. And now to get started with Forex, there are a few you need to follow. I will go over this super quickly. The first one is to choose a broker, and the exact broker you choose will simply depend on where you are from. Make sure to look up what is available in your country and the fees and all that good stuff. I also highly recommend to first practice on a demo account or using paper trading. TradingView is an amazing platform that has a paper trading function, and I do have a video about that, so I highly recommend to check that video out. Another important thing here is to start small. So when you feel when ready for real trading, begin with small position sizes. If you want to learn how to calculate position sizes, I do have a video about that. And it's also very important to really learn the basics before we start here. Here are some common mistakes that you need to avoid. One common mistake is over leverage. That's why I highly recommend to check out my leverage video. The other very common mistake is no risk management, and I actually have a video about risk management as well, so you have lots of content to go through to really get started with Forex. Another one is unrealistic expectations and emotional trading. And last but not least here, some tips for success is to treat Forex as a skill to develop over time. It's not a lottery ticket here, and Forex trading takes time. So that is why I highly recommend to, after this video, start going through all the videos I recommended in this video about leverage, about long and short position, risk management, because if you don't learn, you will not earn trading Forex. So as you can see here, success comes from knowledge, practice, and also very important, disciplined risk management. So start with major pairs, keep position sizes small, and never ever risk more money than you can afford to lose. Alright, so last but definitely not least, I know this video is getting a bit on the longer side, but I do want to show you guys a Forex trading strategy. Right now we are on TradingView, and by the way, if you haven't gotten started with TradingView yet, I do have a special TradingView link. You can use that link to get TradingView Premium for free for 30 days, and you will also get a $15 bonus. So make sure to use that link to get the most out of TradingView. But right now we are looking at Euro US dollar. This is the pair we have been talking about throughout this video, and I also have a indicator down here. So first of all, let me show you how to open up this indicator in TradingView. To do this, you go up here to the indicators tab, and what you want to search for is relative strength. And as you can see here in TradingView, one thing I do really like about TradingView is that the community, it's a massive community, and they have created so many indicators. So as you can see, we have many different kinds of RSI indicators. But for this video, and since we don't have a lot of time, I'm just going to open up the standard RSI. Then I want to go to the settings tab here, because one way that can make the RSI easier use for beginners is to actually change the settings. So you can go here and create an area, because the method, the sort of trading strategy I will show you guys in this quick demonstration here is something called divergence. So as you can see here, when trading Forex, we usually want to have two main things in mind, and that is price action and market structure. And I do have a full video course on price action, and I also have a full video course on market structure. So I do highly recommend to check this video out after this one. But for now, one thing you can notice about this chart, I think even if you are a beginner, you can see this very clearly, that this has been a very significant resistance level. We got rejected 1 time, 2 times, 3 times, even 4 times we got rejected at this level. But what we also can notice is that with these highs right here, you can see that the price printed 1 high and then a higher high. So the price printed higher highs right there. But if you look down at the RSI, you can see that the RSI goes in the opposite direction. This right here is what we call a bearish RSI divergence, and it indicates a reversal to the downside. Once again, if you want to learn more about the RSI, I do have a full RSI course here on the channel. But here we have the RSI, we have bearish RSI divergence coming in at a key resistance. So this we can actually use. We have two bearish things happening at the same time. So this we can actually use as our short signal. What you also want to wait for is some kind of price action signal. Here we almost have something called a BE, or bearish engulfing pattern. So using this price action signal, the bearish engulfing pattern, we can enter a short position right here, setting our stop loss just above the resistance, and with a simple risk to reward ratio of 2, this trade would have looked something like this. Since we have a 15-minute candle, it would have taken like maybe 2-3 hours to lock in that profit. But alright guys, so if you want to become a successful Forex trader, understanding price action is something you can't do without. So now I highly recommend to check out this full price action course. Just click or tap on the screen and I will see you guys over there.